I'm Keegan Shivers.
And I'm Old Man Shivers.
And this is the Shivers Report, where you get the most up-to-date real estate information
in the world!
And more specifically in the Pacific Northwest. Okay, CPI inflation just came out, 4.2%, which is double from where we were in the start of this year, which was below 2%.
Yep.
With that being the case, I mean, inflation is a big talking point right now with the Fed, with Kevin Warsh coming in, and him not being able to really do anything with inflation's kind of skyrocketing in a sense. What do you think that does to the housing market and the outlook of what our summer market kind of looks like right now?
It's sticky, and it's going to stay sticky. The thought of, even if, because it's all about the war, you know, it's affecting gas prices. Mm-hmm. And here soon, from a lot of experts, I'm by no means an expert on supply chain, but we're going to see soon some supply chain shortage with fertilizer, which in turn that we don't get as much crop production, and so we're going to have higher prices in food. So as far as the summer months, nothing. I don't think you're going to see any changes as far as interest rates or anything like that. They might even go up. We're at what, 6.68, 6.7. The market is what it is right now, and you have to understand that, and that's why it's important for sellers and buyers to know that, you know, this is where you're going to be.
Yeah, and I think that's a big point, because I just had a conversation with a client the other day where they're like, well, once this Iran war is over, then interest rates will go down. And because of the length and the time that we've been in this war, we haven't even seen the full effects of what we're really dealing with.
Yeah,
because we haven't seen the supply chain effects.
It's a lag. It's a lag.
Yep.
There's a lot of stuff that's lagging that it really hasn't came into the market yet, which will come into the market. So even if it ends tomorrow, which I don't think it will, we are in this time frame where 2026 is what it is. This is the market that we're in. So we always say this in our team meetings: the market doesn't determine your success, it determines your strategy. So whether you're a buyer, a seller, an agent, you have to understand this is the market. Mm-hmm. Put your plan together based on today's market.
So what would that strategy be for somebody looking at that, and you looking at the data as a professional? What's your recommendation for people right now with the idea that probably not something drastic is going to change here soon?
Well, if you're in the Pacific Northwest, we know majority of the cities and counties have seen depreciation since 2022.
Yeah.
I think it's Washington's predicted all of Washington to go down 0.9% this year, and that's without factoring in inflation. So 0.9% plus 4.2% is what? 5.1% depreciation.
Yeah.
So if you know you're going to sell in the next 2 to 3 years, you have to do that. We know that it's the best price, the best condition, best location. If you can get all three as a seller, that's great. If not, you better be best price, because right now, even though you're only seeing 0.9 to 0.8% depreciation, that's not factoring in what the builders are. Even though their prices aren't coming down that much, they're giving 3.99% rate buy downs. Yeah. They're doing incentives. They're doing add-ons. I mean, so really that number's probably a little bit skewed. And like I always say, real estate's hyper-local, neighborhood, block to block. So some areas are doing great. Some are still getting multiple offers. So it's hyper-local.
Hyper-local. And I think a great point is, I mean, people have been waiting and waiting. It was survived to 2025. Now it's 2026. And I think sellers, or at least some sellers, still have an idea in their brain that, hey, Trump is going to get interest rates down no matter what.
Yeah.
And that's just not the case. You can't force that. Even with having Kevin Warsh being inducted as the Fed chair.
Yeah.
If he were to try something like that right now, the respect that he'd have going forward would be diminished to almost nothing.
Yeah, they're already trying to say he's a puppet. So he can't. He can't. And so it is. The market is what it is. If you are a seller, this is not I want to sell. This is like, I'm leaving the area. I'm downsizing. And then a thing that I always tell sellers is, where are you going?
Yeah.
A lot of people are moving out of state. So is that area depreciating more than our area? So you got to look at, what are you trying to accomplish?
Yeah, that's an important factor to it, because it's easy to think of what you're seeing on the sell side specifically.
Yes.
Like, oh, I'm losing all this money. But you take a look at the 2020 growth since 2020 that we've had.
Yes.
I mean, we accelerated past what the usual appreciation looks like.
Yep.
And now we're kind of fizzling back down to where that normal curve
trend is. Yeah.
Washington
specifically, even with the market the way it's at right now, we're 40% above 2020. Oregon is still like 32% above what it was in 2020.
Yeah.
Worst county in Washington and Oregon is Multnomah County, and they're still up 17.7%. So always ask the question, compared to what?
Yep.
Have values went down? Absolutely. But they're still significantly up across the nation.
Yeah.
There's not one state in the union that has depreciation since 2020. Not one. I think Mississippi is only up 8.2%.
Yeah.
But it's still up.
Yep.
So.
And that's something that I don't think a lot of sellers also think about, is if we see a time where we're seeing slight depreciation plus the inflation. Not a lot of people talk about the inflation piece of that, where that is a big effect in that too.
Yeah.
That, like you said, it's not 0.9% depreciation. It's 5.1% when compared to.
Yeah. And I think as a real estate ownership wasn't necessarily meant for investment. Mm-hmm. Now, we know a homeowner is, like 10 times more net worth than the average renter. Mm-hmm. And why is that? Because Americans aren't great at saving, and it's forced saving, and home values have went up. But there was an article yesterday that I talked about that 18.8% of all the properties that are on the market that were purchased in 2022 are on the market for less than what they bought them for. And that's just the people that are realistic.
Yeah.
And we know if you bought in 2022, 2023, 2024, and you have new construction around, you're upside down. You're upside down.
Yeah. There's nothing you can do.
Nope, nothing.
For somebody like that, I mean, their options are limited too. There's only so many ways that you can go about selling property. And if you don't have the equity in the home, since 2022, I mean, we've talked to a lot of people in like the Hillsborough area, and those are always tough conversations to have. Yeah,
because they're upside down. Mm-hmm. Not necessarily upside. They owe more on their mortgage than what they can sell it for, but all their equity's gone.
Yeah.
But that is, unfortunately, that's just the way the market. It's not a guarantee that home values are going to go up.
Yep.
Historically, they have. Pretty much all a little bit in 2020, they went down, and then they skyrocketed. 2008 through 2010, I think there was a bump between 2004 and 2005 and 1 and 2000, and then 1980. But historically, real estate has been a very, very good. Not talking about living in a home, but investment.
Yeah.
So,
thanks for tuning into the Shivers Report. If you have any questions about real estate,
we have you covered.